Hello, everyone. Good morning from here. Welcome to today's Forex Morning Mastery as we get ourselves prepared for the second half of the week. I hope you all had a wonderful week and trust you're doing very well across the assets we are monitoring so far this week. And of course, from my own end, we've done fairly well this week. Remember, we have been monitoring the USOIL spot, the GBPUSD, our first time in about 3 to 4 months, and the XAUUSD. And of course, besides the USOIL spot, we've been doing fairly well across these assets. And today we are going to be delving back into the market again to see how well this assets have been doing so far this week, looking at the technical structures, and of course breaking down the fundamentals that is guiding the sentiment in this market. And if you are a fan of the GBPUSD, the XAUUSD, and of course the US crude oil, you do not want to miss out on this session as we have some insightful and simple trading setups that will be guiding our trading decisions going into the second half of the week. And for those of you who are joining me for the first time, you are highly welcome on board. I'm very excited to have you here with me. My own name is Sheriff Daramola, and for the next 30 to 40 minutes, I'm going to be your host as we delve into this market together. Now, with that being said, here we will dive straight into the business for today. And as always, the first thing we normally do, of course, is to keep tabs with the market or the sentiment in the US dollar market dynamic. And for those of you who have been with me for a while now, you know how important this is. There is no way you want to be trading the Japanese yen, the gold commodity, or even the crude oil without really having a deep insight into what is really driving the sentiment in the US dollar market. Now, I see your comment, Mokocha Kingdom. Good morning to you. Glad to have you around with us. So, the first thing we do here is to delve into the DXY. And for those of you who don't know, the DXY is the US dollar index. It's a chart that gives us an overview of how the US dollar has been performing across the major assets. Now, from the fundamental perspective, currently the US dollar is holding firm, holding very strong, because traders are waiting for the Fed's next move, whether they will cut rates or keep things tighter after the recent utter inflation data. But peace hopes in Ukraine are easing safe haven demand, which appears to be showing some signs of resistance around the $98.50 level, which we will be looking at in a moment. But the risk ripple in the market still keeps the US dollar attractive, at least in the meantime. And this matters because a stronger weak dollar directly shapes how the oil, the pound sterling, or the gold is going to do in the second half of the week. Now, for those of you who are part of our session on Monday, remember this was the structure we were looking at on the US dollar market dynamic, where we did observe that even though the dollar has been dropping significantly since the beginning of this year, the beginning of July saw a rebound in the price of the US dollar, and this resulted into the series of higher lows we had here, giving us a beautiful ascending trend line to help us navigate this market this week. And if you remember vividly, I did went on to mention that we will continue to look out for bullish expectations on the US dollar, especially considering the technical fact here that the dollar still remains above this ascending trend line. So we saw what happened in the last couple of weeks. Price dropped significantly, but unfortunately for sellers, they were unable to break through that ascending trend line, and of course that was a red flag for us that we might be seeing a new platform to rise. And ever since that Monday session, we saw how the dollar had kept up the momentum above both the ascending trend line and our key level at the $97.70 level. So far this week, the major event that is going to be guiding the sentiment in this market remains the major key event for this week, which is the FOMC minutes, which is going to be published later today about 6 p.m. UTC. That's about 7 p.m. local time. Everyone is definitely looking forward to that one. Then we have a couple of Fed speeches coming up later today, 3 p.m. UTC to be precise, and of course 7 p.m. UTC. We're also going to be looking forward to that one too as well, as the narrative from these Fed officials will give market an insight into what is likely going to happen as regards to the monetary policy of the Fed. Then fast forward to Thursday/Friday, we have the S&P Global publication coming up tomorrow, which will be giving us an insight into the performance of the manufacturing and service sector of the United States. Everyone definitely is looking for that one. So the PMI, the S&P Global PMI, is an index where it ranges between 0 to 100, and anything above 50 is considered as an expansion in that sector, and anything below 50 is considered as a contraction. Now for the manufacturing sector, last month it was 49.8, a little bit lower than the 50 mark, which showed that there was a slight contraction in that particular sector. Now today, everyone will be looking forward to see if there is an expansion or not. An expansion will definitely mean an increase in value for the US dollar. While on the service sector, we had a 55.7 last month. That was quite impressive, but expectations now, based on what is on ground, market participants and economists are projecting a slight contraction, but still above the 50 mark at the 53.3. So these are the major events we're looking forward to between today and tomorrow. Then on Friday, the Fed chairman is going to be speaking. Market is definitely looking forward to that one for rate guidance. And currently, talking about the sentiment in the US dollar market dynamic, traders are pricing in an 85% chance of 25 basis point cut in September. But this is still a speculation, and the US economy shows that inflation is still high, and this of course has been supporting the price of the US dollar since the beginning of the week. Now if the data from today, that is the FOMC minute, and of course the S&P tomorrow, comes in better than expected, we could see the price of the US dollar continue to rise, and of course we want to be capitalizing on that one. Then besides that, the Russian-Ukraine peace talk is likely going to reduce safe haven flow into the US dollar. That is the expectation, considering the fact that we are likely going to increase, drop, what's it called again, the sanctions on Russian crude oil, because we are seeing some positive light that things are going to be getting better. So these are the things that are driving the sentiment in this particular market. And now let's go into the chart and see how this is influencing the US crude oil, the gold commodity, and of course the pound sterling. Now the first asset we are going to be taking on this morning, as always, is going to be the US crude oil market. And on the US crude oil, for those of you who were with me on Monday, remember I didn't really see any significant structure on the 4 hours time frame besides the key level that I did mark out at the $61.50 level. And I went on to mention how this level here had played a significant role in determining the direction of price action in the last 4 to 5 months, from April to be precise. This level had served as both resistance and support line at some point in time. But ever since price broke out of this level in June of this year, you can see price had remained above this $61.50 level. Every attempt by sellers to break through at any point in time failed. As you can see, in August, throughout the month of August, sellers tried to break through, and every attempt we saw buyers come in to push price to the upside. And what does this tell us about the zone? Well, for me, it says that we have a robust demand zone to work with, and as long as price remains above our demand zone, we definitely have no business selling, right? And with this information we had here, we zoomed down into the 1 hour time frame to see, which is our execution time frame, of course, to see how the market has been playing out since the beginning of the week. Now, the first thing we did observe was that the market is an indecisive phase as price action remained confined within the $62.30 level and the $61.60 area, just right above that key level we identified at the $61.50 level. And you know how we use our range bound structures in this community. As long as price remains within the range, we wait patiently for a signal to come. And the signal we usually look out for is either price breaks down the support line to give us selling ideas, or break out the resistance line to give us buying ideas. And I did went on to tell us on Monday that I will be buying. I think we bought right during the live session on Monday. I bought proud to the beginning of the session. Then I added another buy position above the $62.30 level. And of course, the buy position did not do well. The first one closed at break even for me, while the second one kept on running. Most of yesterday it was in a loss, as you can see throughout Tuesday, but right now it is back in profit again. So at the moment, we still maintain the bullish bias. And remember, I told us that if we are buying, we want to be given enough breathing space for price action to move around. And what I mean by that is having your stop loss way below the key level at the $61.50 level to be able to hold on to the position even if the market does any form of pullback along the way. So with the way things are going right now on the US crude oil, the momentum is still looking very bullish, and buying above the key level is making a lot of sense. So we maintain a bullish bias on the US oil spot, and remember that the only condition that will make us sell the US oil spot is only if the support line of that range bound structure is broken to the downside. And we're not just looking at any form of breakdown at all. We want to wait for confirmations to happen. Why? Remember what I showed you on the 4 hours time frame, how this support line had played a significant role for buyers, and how it had been a strong resistance for sellers. Sellers have been finding it difficult to break through that level for the last 3 months. Now, if we do want to sell below that structure, we'll need some confirmations to happen to let us know that truly sellers have come to stay. And what do I mean by confirmation here? I want to see price come back and retest the structure multiple times on my lower time frame. This is immediately after the breakdown happens. So I would like to see price come back to retest the structure. I want to see signs that buyers are losing momentum, and this will reflect on the chart as continued selling pressure below the structure, after which we can now join a downtrend scenario. So for now, we have no business selling the US crude oil. we continue to maintain a bullish bias. Now, to give you a clearer picture of what is going on behind the scenes so that we can also feel a little bit confident around this bullish expectations. So yesterday we saw the API data, which shows a 2.4 million barrel decline in crude oil stockpile in the United States. This was bigger than what market participants were expecting. And you know what this means? It signals that there's been a stronger demand in the US economy. Now, for those of you who are joining me for the first time, who really don't understand what the API data means, now the API data gives us an insight into the stockpile of crude oil in the United States. Now, if this API data declines, that is, the stockpile declines, it means that the supply in the market was not enough to feed the demand, so they had to come to the stockpile to take some oil to feed the demand in the market. So it means that there is a drawdown. It means that supply has reduced and that the demand is more than the supply. And you know what simple economics tells us: when demand increases, what happens? Price definitely rise. Now, if the stockpile increases, it means that the demand is not as much as the supply. So you really understand what this is all about. And with a 2.4 million decline in stockpile, it shows that demand is increasing. Then we also despite this understanding, which supports the uptrend scenario on the crude oil, we also cannot ignore the potential of this resolution from the Russian-Ukraine peace talks. Now, if this comes in fruitful, that is, if there is a resolution, sanctions on Russian oil could be lifted. And you know what that means to the market? It increases supply in the market, and this could cap the uptrend scenario. Now, besides that, traders will also be looking forward to Powell's speech for clues on September policy direction. Now, if interest rate is still going to be maintained, then it could cap the uptrend scenario in crude oil. But if interest rate is going to be dropped, then the value of the dollar will drop, making oil cheaper, because the US crude oil is a US dollar denominated asset, and that could increase the price of crude oil. So we are at a critical juncture at the moment, but with what is saying on the technical on the chart right now, it reveals to us that the sentiment is still leaning towards an uptrend scenario. So for me, I still maintain a bullish bias here as long as price remains above the $61.50 level. And one thing I would also like to mention here is that we do not want to panic. Even if price drops into the zone, as long as it remains above the $61.50 level, we feel comfortable in our buy position. All right, so we are not considering selling unless the key level at the $61.50 level is broken and retested. So that is my simple view on the US crude oil going into the second half of the week. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So I'll take about 5-10 seconds. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So in the absence of no questions, I want to assume that we are all on the same page. Hope we've marked out the structures accordingly. This is what we are going to be using to navigate the market. The structure is yet to change from what we saw at the beginning of the week. The range bound still holds. Price still remains above the key level, and will continue to maintain our bullish bias on the US crude oil. So I wish us all the best of luck on this asset. And if anything new comes up, maybe during the course of the day, I will definitely update us on my Telegram platform. So with that said here, let's move right into the next asset on our watch list. Stay tuned in. So the next instrument we are looking at is the GBPUSD, and of course I did tell you on Monday that I decided to trade a GBPUSD due to an insightful trading setup I saw. Remember, we have been monitoring the USDJPY instead for the last 4 to 5 months. And due to the choppiness in that market, I decided to drop it for this week, and let's look at the GBPUSD. And so far this week on the GBPUSD, we are doing very well. Now, at the beginning of the week, looking at the structure here, this was what we were able to come up with after taking into account the character of price action since the beginning of July. So we don't go too far into the past. We want to focus on what is going on recently, and this recently we are talking about 6 to 7 weeks of historical data. And from what we have here on this 4 hours time frame, you will see that the price of the pound sterling has been dropping. Yes, we saw a series of lower highs, and when we connected the series of lower highs, what did we see? We had a descending trend line that will be guiding our trading decision. And interestingly, last week, for the first time in about 5 weeks, price action finally broke out of that descending channel to emphasize a shift in the momentum in this particular market. And look at what happened when price broke out of the structure. It broke and came into the 1.3600 area. And as soon as price got into the 1.36, what did we notice? We noticed selling pressure resume again. And this is not coming as a surprise. This area here had been a selling niche since the month of May. Now look at what has been going on here. Sellers came in at this point, negating bullish attempt. The same thing also happened here in June. At the beginning of June, mid-June, it was still serving as a selling niche, and then we saw price break out the structure late June. Then price dropped below again in July, and since then price action has been trading below that structure. So it was actually our key level going into this week's trading session. And when price remains below the key level, we obviously want to be looking out for selling ideas, right? Now, zooming into the structure after the breakout of that descending trend line, from a theoretical perspective, it is expected that price is likely going to come back and retest the structure that was broken in an attempt to continue the uptrend move. And with this idea in mind, we position ourselves for selling opportunity. Now, to back this bias up, we also saw that price appeared to be trading along this temporary ascending trend line, which we marked out on the 1 hour time frame. And since price is trading below the key level, breaking down the ascending trend line, it was much more reasonable for us to consider selling ideas. Now, when we scale down into our 1 hour time frame, we had this all set up here. So let me show you what the 1 hour time frame was looking like. So at the beginning of the week, after looking into how the market has been playing out for the first 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours, we had the range bound structure, right? And you know how we use our range bound structure. As long as price remains within, we wait patiently and wait for the signal to come. And you know what the signal is: either a breakout of structure for buying ideas or the breakdown of the structure for selling ideas. And look at what happened. We saw price breakdown, retest the structure. We had this sell position triggered during our live session on Monday. And ever since then, this sell has been running. As you can see at the bottom of your screen, the sell position still remain intact. And I did tell us on Monday that we will be looking to add more sell if price breaks down, retest the 1.35250, which is still running at this point. And for those of you who capitalized on this opportunity, well done, and kudos to you. So all we want to be doing right now is to move all stop losses accordingly to secure some profit as we continue to monitor price action. And for me, I already moved my stop loss to somewhere around the 1.35113, just right below this particular area here. So move my stop loss there, and let's see how the market is going to play out from here. And if you look at the structure closely, you would notice that the pound sterling is doing some form of recovery, right? And why is that so? Well, if we look at the economic calendar this morning, the US economy calendar dropped the UK inflation figures, that is the consumer price index, and of course it came in hotter than what market was expecting. As you can see, market was expecting a deficit of 0.1% for the month over month and 3.7 for the year over year. And look at what happened. The actual figures came in at 0.1% and 3.8% respectively, even higher than the previous month. And this, of course, coupled with the retail price index, which also came in higher than expected, is keeping pressure on the Bank of England to stay cautious with rate cuts at this point in time. But the fact that the US dollar is still holding strong ahead of the Fed chairman's Jackson Hole speech and expectations of a September rate cut, traders are also watching PMI data from the United States and geopolitical talks for the next move. So in as much as the pound sterling is reacting positively to the recent development from the UK economic data, we cannot ignore the potentials that the dollar is still very, very strong. And with the FOMC minutes coming up later today, the initial jobless claim count coming tomorrow, and of course the S&P Global publication, it could be a little bit dicey at this point in time. So with the situation we have here, it is reasonable that we move all our stop losses, secure the current sell position while we wait patiently for new structures to emerge and guide our trading decisions today. Now, to help me navigate this market today, I have a new structure identified on the 15-minute time frame. Now, scaling down into the 15 minutes time frame, this is what I was able to capture after looking at how price action had evolved since last week Thursday. Now, if you do this correctly, the first thing you will notice here is that price has evolved into a descending channel, and you know what that means. It tells us that sellers are having a feast right now. Prices within finding lower lows and lower highs, giving us a descending channel to work with. Now, zooming into the structure, after price tested the support line here, we can see price is back into the 1.351, a psychological level, and since it got here, it has been consolidating. That's since this morning. That's for about 4 to 5 hours now. It has been consolidating around that area. Now, the question here is it going to respect this descending channel to continue the downtrend move, or are we going to see price break out of structure to incite another wave of bullish momentum? So to help me navigate this market today, we have a simple structure here. And in fact, due to the fundamental factors, besides the fact that the UK gave us a hotter than expected CPI, service inflation also jumped up by 5%, and besides this, and the retail sales data, of course, I am not going to just ignore the seller's expectations here. Remember, the US dollar is still very strong despite rate cut expectations. Then we have the upcoming PMI data, which is expected to rise based on the consensus we're seeing on the economic calendar. So, and of course, the geopolitics too as well, which could also influence safe haven demand. So I'm still leaning towards a downtrend scenario based on this whole structure. But let's look at what the structure is saying on the chart. What does it reveal to us about the sentiment in the market? So one thing I noticed here is that price is back into a critical juncture, another psychological level at the 1.351, right? And this area here, if we look at it closely, since Monday's trading session, it has been in favor of sellers. Now look at whenever price comes in here, what did we see? We see sellers come in at any point in time. Look at this also happened on Monday, as you will see here. This one too, and then this one too. And then we saw price, though we saw a breakout of structure. It didn't last long. As you will see, yesterday price came back below the structure, and since yesterday price has been trading below that area. Now the last 4 to 5 hours has seen that buyers, despite the hotter than expected CPI data from the United Kingdom that gave us some rebound in price, buyers are still finding it difficult to break through that area. And what does this mean? It means that sellers still have a say in this market, and as long as price still remains below that 1.351, it makes a whole lot of sense that we continue to maintain a bearish bias. Now, due to this understanding, I still hold a sell position. And for those of you who are joining us for the first time, who probably missed out on Monday's session, I'm suspecting that selling below the 1.3500 level is looking very reasonable at this point in time, with a stop loss sitting above the descending trend line, or that 1.351. So we are talking about between 10 to 15 pips of stop loss on this one. And if you're a day trader, you can be looking at your TP at the support line of this range bound of this descending channel, which dovetails to about 50 pips. Or if you're a long-term trader like me, we go to the 4 hours time frame, and I'm looking at TP. Let me show you where I'm looking at TP around this trend line here. So I told you this trend line was broken, and then we may likely see a retracement back into this trend line before the next leg of bullish momentum will happen. So that is basically what I am looking at around the GBPUSD. So I still maintain a bearish bias based on what we are seeing on this 15 minutes time frame. Now, if it gets to a situation where the 1.351 gets broken to the upside, I would like to see some confirmations like a retest of structure before I want to jump into a buy. Now, when we buy from above the 1.351, please let's ensure that as soon as price gets around this trend line here, that's about 10-15 pips, let's move stop losses to break even while we monitor price action again around this area, because sellers could still come in. Remember, we said how much this area has been a strong selling niche, and if it gets broken to the upside, this will further emphasize a bullish bias in that area, and we could be looking to add more buy at the break of the 1.35 to 50 level. So that is basically what I am looking at. So our center of focus today is between the 1.351 and the 1.3500 area, where depending on where or the direction the breakout happens will give us a clue to what direction price action will be taking today. So that is my simple view on the GBPUSD, and I wish us all the best of luck on that one. If you have any questions, let me know in the comment section. I want to take another 5 seconds to take a sip, and we'll be right back to continue with the final instrument on our watch list for today. Stay tuned in. All right. So here we go. We no questions. We are on the same page. Mark out the structure. Our center of focus today is between the 1.351 and the 1.35. Let's see how the market will play out. We're still maintaining a bearish bias, right? Price remains within the descending channel. And then a breakdown of the 1.35 for newcomers will be a good spot to join a downtrend continuation. And if price ever breaks out of the 1.351, it could change the sentiment in the market. So I wish us all the best of luck on the GBPUSD. So moving on to the final asset on our watch list. So the final asset on our watch list is my favorite amongst all of them all, and that is the XAUUSD, popularly known as the gold spot. And of course, this is the 4 hours time frame of the gold commodity, remember. And then what we notice is the fact that price appeared to be within a descending channel after connecting the series of lower highs, as you will see, to give us the resistance line of the descending channel. And then we connected a series of lower lows to give us the support line of the descending channel. And to help us navigate this channel, we had our key level for this week at the 3,335 level. Now, at the beginning of the week, we were buying the gold. Remember, we bought the gold above the key level, and that's we saw price move about how many pips? About 250 pips before this bearish move happened. And I can remember mentioning that we need to be very careful that as soon as price gets into the resistance line of that descending channel, we could see price drop again, and that was exactly what happened. Price broke down the 3,335, break down the key level to incite another bearish move to the downside, as you can see here. Now price is gradually coming back into the 3,335 as it holds small gains following weak stock market, which gave it some safe haven demand. But peace hopes in Ukraine and a strong US dollar are limiting any form of upside scenario here, making the gold looking a little bit bearish at this point in time. And from a technical standpoint, prices within the descending channel, we could see price come back, retrace into the 3,335 to incite a move back down into the support line of that descending channel. But at the moment, aggressive bets cannot be visible as traders are cautious ahead of the Fed minute release coming up later today. That's 6 p.m. UTC, and of course Powell's Jackson Hole speech, which is coming up on Friday, which could shape expectations for September rate cuts. Now, with this whole idea and speculation in mind, how is the market going to be faring? So for me, looking at the 4 hours time frame here, from a technical perspective, after the breakdown of this 3,335, and secondly, price remaining within the descending channel, it is likely that we see price come back, retest the 3,335, and then inside that massive move to the downside, which is very, very likely based from a technical standpoint. But if we consider rate cut expectations, we could see price climb back up. Now, scaling down into the lower time frame, I wanted to understand how the market is digesting these fundamentals and how they are reacting to it. So on the 15 minutes time frame, it is quite clear that the market is trending lower, right? And after connecting the series of lower highs, we have a descending trend line to guide our trading decisions for the second half of the week. So that's our key level there at the 3,335, right? And there is a good chance that we could see price retrace back into the trend line to incite a move back down. Now, one thing I did was to now zoom in to see what has been going on in the last 4 to 5 hours. And if you zoom in closely, you will see that the market has been has been ranging. And I was able to cut a range bound structure between the 3,326-ish and the 3,323 area. So this area here during the New York session yesterday was more of a consolidation before price dropped down. And the last 4 hours now, we can see price is doing a consolidation around that same area. Now, how do we navigate here? Well, if we look at it from the perspective of the trend, which is bearish, it's reasonable to consider selling below the 3,323 because a breakdown of that structure could incite the third leg of the bearish leg that started this week. However, if price action breaks out, retests the 3,326, and then buy pressure persists there, we could see a move back into the trend line or the key level, which will be dovetailing to a minimum of 57 pips to a maximum of 85 pips before the next leg of bearish momentum begins. So this is how we are going to be trading this one today. So if you're a scalper, a day trader, this one could be for you. Waiting for some buy position above the 3,326, placing a buy stop order there could be looking reasonable, and then stop losses maybe below the 3,323, so that's about 35 to 40 pips of stop loss, and then have your TP at the 3,335, which will be dovetailing to about 85 pips. Now, as you buy above the $3,326.50 level, please be mindful that you are buying within a descending channel, descending trend line. So what that simply means is that you are taking a counter trend trade. Now, if you are taking a counter trend trade, you know what that means. Sellers can come in anytime. So if you buy and you're in profit, please move your stop losses to entry point at least. Secure the position so that even when sellers come in, the worst case scenario for you will be break even. So if price climbs now and triggers the buy stop order above the 3,326, you buy, and as soon as price move, let's say about let's see how many pips is that, about 20 pips, 25 pips, just move your stop losses to break even, and then let's see how far this will go. And if it moves into the trend line, move your stop losses, secure more profit while we continue to monitor price action if it will get to the TP at the 3,335, right? And if we are selling below the 3,323. So for long-term traders like me who are looking to buy all the position for an extended period of time, I will wait patiently for price to get into the trend line or the 3,335, where I will be looking at continued selling pressure or any form of reversal setup. Let's say a double top structure, head and shoulder patterns, then I want to be joining that move to the downside. So that is basically what I will be looking at to navigate this market today. So I do hope I made myself very clear on this one. If you have any questions, feel free to let me know in the comment section, right? So the trend is still looking bearish. We are only, if you are buying, we are only doing a short-term buy on this one, right? And if we are selling, we are going for a long-term. That means we will have to give enough breathing space for price action to move around. So that is basically what I'm looking at today. So let me just illustrate the signals here. So I'm looking to sell below the 3,323 if price drops below that structure, buy above the $3,326.50 level short term, bullish expectations. And remember, your stop loss is about 30-35 period of stop loss, and then TP somewhere around here. And if selling pressure now comes in anywhere within the zone, like double top structure, head and shoulder patterns, we sell the breakdown retest of the reversal setup. So that's basically XAUUSD for today. If you have questions, let me know in the comment section. I'll take some time off, and let's see before we start rounding up on today's Forex Morning Mastery. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? And it's on this note we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. I really appreciate every moment I shared with you. Hope you all learned a lot from this one, and for those of you who joining me for the first time, hope you are able to gain one or two things from our discussions here. And trust me, the more time you spend with us, the better you get to understand my analytical approach, and of course this can go a long way in helping you to make your own independent trading decision. So today we were able to take on all of the three financial instruments that I'm monitoring this week, which includes the US crude oil, the XAUUSD, and of course the GBPUSD, where we were able to identify simple trading setups that we will be using to guide our independent trading decisions today. And I do hope you all marked out the structures accordingly. If you have done so, well done, kudos to you. So all we need to do right now is exercise patience and allow these structures to mature. And for those who joined us for the first time, I hope you gained one or two things today. If you did, why not join us in our subsequent editions? The next one is on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC. As we come here again to review how well these assets have done, and of course prepare for the final trading day of the week, which promises to be another exciting one. We're expecting some volatility this weekend as well, so let's be here again to be part of the party. So it's on this note I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.